You finally landed it. A massive commercial heating and air conditioning contract right here in Lubbock, Texas. The schedule aligns perfectly with your crew, and the numbers look incredible. Then the general contractor slides the final agreement across the table. Buried in the paperwork is a standard requirement for a certificate of insurance, or COI, a one-page document summarizing your active policies. Most contractors assume that if they can simply hand over that piece of paper, their business is covered and they are ready to get to work. But treating that certificate requirement as a routine administrative checkbox is exactly how a highly lucrative job turns into a massive hidden financial liability.
By putting your name on that line without checking the fine print, you are agreeing to contractual insurance requirements that routinely wipe out the profit margins you just calculated. You are taking on obligations that might exceed your current coverage, leaving you exposed to risks you didn't even know you were accepting. To understand the trap, look at the document itself. This is an ACORD 25 Certificate of Liability Insurance. It is a strictly regulated, one-page summary governed by the Texas Department of Insurance. Here is the primary misconception. This piece of paper only serves as proof that you held active insurance at the exact moment the certificate was printed. It does not change your actual policy, and it certainly does not guarantee that you comply with the complex requirements buried in that new contract. In fact, under Texas Insurance Code Chapter 1811, using a certificate of insurance to amend or expand your underlying coverage is strictly prohibited. It is a snapshot of the past, not a shield for the future. Handing it over doesn't protect you from the new demands the general contractor just handed you. Texas presents a unique challenge for contractors. State law does not actually require most private employers to carry workers' compensation insurance. But general contractors often write their own rules, aggressively overriding state reality by demanding workers' compensation. Sign without that policy, and you're in breach of contract before stepping on site. Adding it for one job requires structural business changes and steep premium spikes. Your perfectly legal business operations suddenly become a massive financial liability the second your pen hits that paper. Then come the endorsements. Endorsements are specific, expensive add-ons buried in the fine print that modify your policy, like a waiver of subrogation, which prevents your insurer from covering costs from the party that actually caused an accident. The agreement will also likely demand increased liability limits far beyond your current coverage, forcing you to purchase an entirely new umbrella liability policy to make up the difference. Here is the worst-case scenario. You sign the paperwork, and then your current insurance provider outright refuses to issue those specific endorsements because they don't offer them or you don't qualify. That refusal creates a massive gap. You are now legally bound to provide coverage that simply does not exist. Agreeing to these blind clauses transforms a highly profitable handshake into a legally binding trap of uninsurable risk. This chart shows what happens to a perfectly priced job with hidden requirements. We start with a healthy profit, then deduct upgraded general liability, new workers' compensation, and umbrella policies. The cumulative cost of these forced upgrades eats your expected earnings, reducing profit to zero. You could execute an operationally flawless installation, finish ahead of schedule, and still lose money on the job simply because you didn't calculate the insurance math beforehand. Let's go back to that contract on the table. This time, you don't sign it. The golden rule for every HVAC contractor is to send the agreement to your independent insurance agent before you put your name on the dotted line. Experts like the team at Hettler Insurance Agency use their 46 years of experience to perform a complete risk autopsy. They translate the complex jargon, identify the coverage gaps, and calculate the exact cost of the required endorsements. Never guess about your coverage. Let an expert do the math, so you only commit to the jobs that actually make your business money.